High short interest can translate into a massive reversal rally for these short squeeze stocks to watch. These are the short squeeze stocks to watch for a massive rally in fourth quarter 2023. Lucid Group. Cash burn for an extended period remains a concern, but the stock is oversold. ChargePoint Holdings. Another equity dilution of $232 million, but the company expects positive earnings before interest, taxes, depreciation, and amortization by fourth quarter 2024. Marathon Digital Holdings. Aggressive growth in hash rate can boost revenue and cash flows if Bitcoin trends higher. Let's dive in. Here are the 3 short squeeze stocks to keep an eye on in fourth quarter. Welcome to Timely Investment Research. In the last few years, short squeeze stocks investing gained prominence in the euphoria of 2021. Retail investors targeted stocks that have a high short interest. When the stock started trending higher, shorts were covered, resulting in a massive rally in quick time. There were multi-bagger stories in a matter of weeks. Of course, GameStop was the poster boy of the short squeeze rally. Coming to the present times, the markets are certainly not in a phase of euphoria. However, stocks with high short interest continue to attract attention. Even from a technical perspective, oversold stocks with high short interest are likely to bounce back strongly. It's important to mention that the time horizon for investing in short squeeze stocks is a few weeks to a few months. A 50% to 100% reversal rally in these stocks is a good time to exit, as most of these stories are average from a fundamental perspective. Let's discuss 3 short squeeze stocks to watch for a big rally. Number 1. Lucid Group. Lucid Group stock performance has been dismal, with a downside of 61% in the last 12 months. Sentiments remain weak even after the big downside, and the short interest in the stock is currently at 25% of the free float. I believe the sell-off is overdone, and Lucid Group stock is poised for a quick rally of 50%. The underlying concern for Lucid Group is cash burn through 2026 or 2027. That implies sustained dilution of equity. However, in the recent past, there have been some positives helping to reverse sentiments. First, Lucid announced the opening of its first-ever international car manufacturing facility in Saudi Arabia. The plant has a capacity of 155,000 electric vehicles per year. That will likely contribute to delivery growth in 2024 and beyond. The company is also on track for an annual production guidance of 10,000 vehicles. The production of Lucid Gravity is expected in 2024, with deliveries planned for the following year. That will also contribute to delivery growth. Overall, some near-term positive news could trigger a rally from deeply oversold levels. Number 2. ChargePoint Holdings. ChargePoint Holdings stock is another name on a sustained decline. After the big plunge, a 50% rally cannot be ruled out. It's worth noting that ChargePoint Holdings stock has a short interest of 26% even after the big correction. Coming to the reasons for correction, sustained cash burn and intense industry competition are key headwinds. Further, ChargePoint announced a capital raise of $232 million. Dilution of equity is the reason for the recent downside. Having said that, ChargePoint indicated that adjusted earnings before interest, taxes, depreciation, and amortization will likely be positive by fourth quarter 2024. That is good news, and if earnings before interest, taxes, depreciation, and amortization losses narrow in the coming quarters, the stock is likely to react positively. It's worth adding here that I don't see concerns from a revenue growth perspective. ChargePoint has a leading market position in North America and is already present in 16 European markets. With a big addressable market, top-line growth will remain robust. Number 3. Marathon Digital Holdings. It's been a volatile year for Marathon Digital Holdings stock. The volatility has been in sync with the movement of Bitcoin. I believe Marathon has average fundamentals. If Bitcoin trends higher in the coming months, Marathon Digital Holdings stock could easily rally by 100%. Even with the recent correction, the short interest in the stock remains high at 28%. Regarding the business, Marathon has been aggressively ramping up Bitcoin mining capacity. To put things into perspective, the company reported an operational hash rate of 7 exahashes per second as of fourth quarter 2022. With capacity addition, the hash rate increased to 17.7 exahashes per second as of third quarter 2023. Once the current expansion is completed, the operational hash rate will swell to about 30 exahashes per second. That will position Marathon for robust revenue and cash flow growth in a scenario of Bitcoin surging higher. That seems likely with a Bitcoin halving due in 2024. Therefore, Marathon Digital Holdings stock seems poised for a massive rally and is among the short squeeze stocks to watch. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.